when you look at the numbers and the volumes, it has been a pleasant quarter actually for MCX. They have forayed into agri space as well, and non-agri has been a strong point for them. And options for commodities were launched in the previous quarter also, and those numbers also are showing slightly positive onto that one. The stock, of course, on your screen isn't done so well, 5% down, and that is because the revenue from other income is something that MCX has not been able to hold on. But Mrugank Paranjape now joins us to talk more about the numbers, the volumes, the technical glitch, and of course the road forward for the exchange from here on. Mrugank, hi, thank you so much for joining us. You know, there is one thing that almost everybody keeps going back to, would want answers to, and that is on what really is happening between MCX and NSE. While of course you have come out with clarifications, but if you can throw some more light onto that one.
Yeah, on that one, we've issued the clarification on the BSE, which is our primary listing exchange. I would continue to say that exactly what we've said there is what I would like to tell your viewers again. That it's something which we continuously evaluate as an option. Of course, the change in the market environment is there from October, and that's why as a board we will continue to evaluate all possibilities. But at this point of time, there is nothing else which we have in terms of reporting, in terms of our regulations that we need to report on this matter.
All right, Mrugank, you're not saying a yes or a no to that, but there are other exchanges who would start offering commodities as a segment come for October 1st. We have seen BSE, NSE actually start mock trading as well, and they would want to foray with non-agri space, which has been your strong point all of these years. How are you readying yourself as an exchange for this competition?
The analogy we draw in history is to the Indian manufacturing segment, where car manufacturing segment, where early 90s we had very few participants, and amongst them a couple of Indian houses, and you know, there was this whole market opened up. What's really happened over the last 20 years is that you know, of those today we know that 2 of those car manufacturers are amongst the world's largest manufacturers as well. So competition really grows the market. We've seen it happen in many segments, and which is what we think will happen here. In fact, to your last point, the opening up of the equity markets for a longer period of time, we genuinely believe will have a positive knock-on effect, because a larger participant base will be there on the screens and trading, and with the movement that we see in commodity markets, which is linked to the international markets, we believe this has definitely a positive knock-on effect for us. In terms of our market share, clearly in the products that we have, we believe that our strong partnerships in those products, the fact that these products have matured over the years, we have the expertise to manage deliverable contracts, which is something which is absolutely key from today's environment. I think all of this will continue to give our existing products the necessary depth and liquidity that we need to maintain and retain. I think you know, of course there could be some very new commodities launched by the other exchanges, and they could be successful, and that's really welcome, because that will grow the market. But at least when it comes to our own products, I think we feel very confident of retaining our liquidity and maintaining what we have in terms of our market share there.
Mrugank, one thing that hasn't worked for the exchange in last couple of months on quarter clearly has been the technical glitches. Not a good news clearly. What have you done? What has been the reason for this, and how are you assuring that this is not repeated going forward?
This was what we mentioned earlier, an error at what is generally referred to as the TCP, Transmission Control Protocol. It's something which is somewhere below the application level, around the operating system and the hardware, and having completely isolated this incident in terms of where it is happening, we have been able to put in a solution which actually bypasses that particular components of the hardware which had caused these problems. As far as therefore our solution is concerned, absolutely have that confidence. We've reassured our regulators about the same, that we do not think this will recur in terms of the existing infrastructure. Of course, we will continue to be absolutely vigilant and keep looking at more of what we can do so that such things don't happen on the exchange again.
Mrugank, one final question, and what is the road ahead now? Because we've seen options come in the previous week. The numbers, that is the profit for MCX, hasn't been so great quarter on quarter, year on year basis as well. But going forward, what is the exchange looking forward to in sense of improving all of these numbers? What are the new products that are on the anvil now?
We feel very good about the fact that we've got a path laid out which the regulators have done in a very consultative way. And the very positive thing about it is that this path hasn't changed in any ways over the last 1 year, and we see that path to continue. And that path is based on 3 pillars of our growth. It is essentially around products where we've seen options come in. We believe index trading in commodities will come in during this year. The second component of that path is around distribution. Bank subsidiaries were allowed. The largest bank subsidiaries are already our members. We are very confident of getting them to trade. We will do that within this quarter. And the integration of subsidiaries of broking houses where they were having one equities and one commodities entities, that integration is well underway. We believe more than 70 to 80% of the market is already integrated, which means that for the retail participant, they already see one single screen, they have one single interface, they get one composite capital to use. So I think all of these are the ways in which we genuinely believe this market will grow. Yes, the institutional segment was a part of this growth that we were all expecting to happen faster. We are cognizant. I think the regulators are absolutely helping all the market participants to make sure that they can understand and absorb and move forward on these products, but that's something on which we will need to see more action in the next 3 to 6 months. We also believe that the commodities segment is probably the most exciting and the most promising segment, so we will stay focused on that. Yes, as and when opportunities come up in the spot markets related to commodities, we will obviously be absolutely eager to grab those opportunities. But at this point of time, we believe staying focused on commodities and growing our market in line with the path that we've seen over the last 2 years and continue to see for the next 2 is the way we will grow our business.
All right, Mrugank, we'll let you go at that. Really appreciate you joining us. So that really is the last word coming in from MCX. We'll continue to see more development in case of the commodity exchange. And of course, it really is about the commodity index launch is what they are looking forward for now in this year.
Okay, all right, Manisha, thanks very much for that. MCX in fact reported what was a 70% fall in profit year on year as well as on a sequential basis. So it's been a tough quarter on the bottom line, but there was an exceptional outflow this quarter as well. Take a